So let's move on to the next section, the next segment. This came out a few days ago on Reventure, and Jason and I we follow Reventure. He has a lot of good content. I use his app pretty regularly just to see what's going on in the market. And he had a video with some pretty interesting comments. He's reacting to the Wall Street Journal's article, and I'd like to pull that video up so we can react to it together.
The subprime bubble 2.0 is about to burst. It turns out that the US government has been making the mortgage payments for hundreds of thousands of defaulted mortgage borrowers using taxpayer dollars, and this was just exposed by the Wall Street Journal. And if it's reversed, it has the potential to cause a massive cataclysmic housing downturn in many cities and neighborhoods across America. And the big issue is the FHA mortgage program, the first-time home buyer mortgage program, where you could put 3% down to buy a house. This mortgage program now has a 14% default rate. The default rate's 13.5%. Over 1 million mortgage borrowers on the FHA program are currently in default, and the Biden administration basically was blocking these defaulted mortgages from going to foreclosure. And what the Biden administration was doing was that when a mortgage borrower went in default and claimed financial hardship, they stepped in and made the mortgage payments for them. Or they tacked the mortgage payments onto the back of the loan so the borrower has more debt. And this has been something that's been artificially inflating the housing bubble and preventing the foreclosures and the listings from hitting the market. And
I don't think the two like connects.
Hmm.
Yes,
What do
like
you
I
mean?
don't think so because like you got to look at the fact that like not just FHA people were doing it. Everybody was getting the their loan mods and also the program because it was COVID.
Forbearances.
So it wasn't because of FHA customers, you know? It was the time in it was the time in a particular time in our economy, I mean in our market that's happening globally. So I don't think like, it's FHA customers. FHA customers basically to me like, allow FHA is not a first time home buyer. It actually means the Federal Housing Administration. That's what FHA means. That's what the program wording is. And basically like because you could be a second home buyer, a third home buyer, and you can actually qualify for an FHA. So no, that I don't believe that is true at all. It's a great program. It's a 30-year fix, and you actually have to qualify in terms of income, but it's more of a program that actually gives you a little bit more forgiveness than a Fannie and a Freddie loan, because you could be out of a bankruptcy for 2 years. Because why suffer? Why make a customer suffer for 4 years, right? Out of bankruptcy. So it's a great program. A lot of people can get into a house because of the FHA, and the rates are great. So it's not that they're putting a higher rate, like onto it. They're actually giving the customer a lower rate. For someone, let's say, have like lower credit, they're not hitting the rate with the credit risk-based pricing hits like Fannie and Freddie are doing. So FHAs are a great program, and I don't believe that what happened, like it's masking the foreclosures. Everybody was going into skipping mortgage payments because of the time that it was happening. It was COVID time. So
Yeah, but I understand because that's a really good explanation of FHA mortgage, Nikki. If I what I think what Peter or Reventure was actually saying was the Biden administration had a moratorium, not just forbearance. So there were actually, after the forbearance period, people that requested more info to say financial difficulty, they kind of try to sweep it under the rug and stepped in to pay or push that to the back again a second time outside of the COVID protection. So there's actually 1 million people, is what they're saying, they uncovered, or there's 1 million homeowners that if they lift that protection off, they are in full foreclosure, but they just blocked that from happening. They're in true default after the COVID protection ended because they got more protection that wasn't supposed to be there, is what I'm understanding.
but when I see customers with like FHAs, or even other loans, like they have a deferred interest loan in the back end. It's kind of like you're still keeping someone in the house, right? And basically like
Yeah.
if they come out, they're gonna have to look for a house or have to go into some other type of living. And with how much housing markets it's right now, it's like a rolling cycle. Like I feel that they're actually helping the consumer by keeping them in the house. Because just like 2010, right? There was the Making a Home Affordable program. So that program allowed people to refinance at 120%, right? 130% on their property, on their loan if it's a Fannie or Freddie loan. So it's kind of the same thing. The government at that time did it for Fannie and Freddie loans. So then why shouldn't they do it for FHA loans, right? Because then who's to say that, a year after COVID, everybody's back on their feet again? I just believe that this program, like, the government is trying to help, and it's a good help. 'Cause for you to, you know, let these people come out, and because right now, like they put the default, I mean, the deferred interest in the back. Those people still in the house, they actually made the rate lower, so it makes it affordable for them. So it's kind of like another program that's like making a home affordable for the customer. So I look at it as the same, not just FHA loans.
It's a good protection in your eye because it protects the housing market from falling because it's not another
Hmm.
distressed sale. So it keeps your neighborhood safe, if that's the intention, right? And then if they
Yes.
continue to allow people to not pay mortgage payments and keep tacking it on to the end of it, there's no equity left at all. So they're already upside down. So the downside risk is a whole market collapse if they lift it and they stop paying for those mortgages or allowing a continued deferment. That's what I see when I see that. It's like they've already financed 97% of it. Interest rates at 7%, 6%, or 5%, whatever it is. And if they tack on a year's worth of mortgage, you're already above the home's value. And if you're in Florida or the Sun Belt states, right, then and that market, we're already seeing a pretty big decline in home values. So are
I
people
guess
not
those
able
people
to sell their
they
home?
can't cash out.
Because they
They can't
or are they
cash
going to
out.
just let them do like you said a HARP refinance with Fannie and Freddie but for FHA to a lower rate? Maybe actually no, that actually makes sense because if it's an FHA loan and they don't do any
They
appraisals
don't do appraisals.
and rates drop, then you just streamline that down to like a 3 or 4%. Maybe that's what they're planning long term. Allow them to just stay in the home, and then eventually, when the market allows, you'll do a FHA streamline, and you'll get your lower payment, and you'll be back on your feet. Maybe that's what they're thinking. I have no idea.
Yeah, that's a good point. A million people, not only a million homes hitting the market at the same time would be disastrous, but a million families looking for rental properties or new homes and they have a default on their credit is going to be pretty disastrous.
And why? Why repeat history again, right? It's basically like if the government can stop what happened in 2008, 2009, like quicker, like what they're doing right now, I think they're doing a good job. Keep the people there. Keep the people in their house.
That's a very that's a very good point, Nikki. I didn't think about it that way. Because if you keep them in the house, then you don't have any foreclosures, and you don't ruin a whole real estate market. And then if
That-
the rates get pushed down because whatever policy makers are in office today, Fed cuts rates and we're at 4%, that person just cut his mortgage bill by like 30% per month, right? Now he's back on his feet. That's pretty genius if it is.
You guys, Milton Friedman is rolling in his grave right now. No, this is very this is like the opposite of free market economy. So free market economists would say let it crash, right? The system needs to get purged, and if it fails, there was something inherently wrong with it, or there was a problem in it that needs to be fixed by the market, and the market will eventually figure itself out. But you're saying no, this is a situation where it is good for the government to step in, and it's right to stymie the pain of average Americans who have many of them are probably first-time home buyers. And instead of letting them, I guess, letting them burn with whatever is crashing, just
Like
artificially prop it up, even though it's some artificial, quote unquote.
we don't want a repeat of 2008.
I don't know. It doesn't feel like a free market at times when you look at it with how things are going.
But we don't want a repeat of 2008, and what did 2008, 2010 brought us, right? still a lot of pain. Some people are still suffering through it. So free market or not, like I think that's a sector of the of our population that, should benefit some to be able to stay in their home. Because who will come in and just gobble up houses that are in foreclosure, right? Investors, yes. But the thing is that to me, it's actually I look at it as like they're halting a 2008, 2009, like then it won't go into a global effect for what had happened back then. So I don't know. I have a different view of it.
That's a really good point, Nikki. I did not consider that. I was thinking more, you know, from from like small time investor standpoint, seeing a million homes go into default and seeing prices radically reduced in certain neighborhoods would be maybe a good correction in the market because it would allow uh, housing to be more affordable again for people who are waiting. They're renting and they're waiting for their first opportunity to get into a home. But it does come with a lot of collateral damage, and to weigh the pros and cons of that is very difficult.
And you bring up a good point because who would buy those homes if it hit the market, right? Would they just FHA offer it all to Blackstone or the other private equity company, huge hedge funds? Where would those homes hit the market, right? At a discount.
Yeah, people who maybe have a little bit of cash on the side, they're like, oh, they're like rubbing their hands together and salivating at the prospect of buying a few foreclosed homes if a million hits the market. But realistically, like you said, the ones with all the cash are the private equity, the Black Rocks, the Blackstones. They're the ones that are going to benefit the most.
Because it was a huge market crash and hold for a long period of time after '08, because people just couldn't buy homes at all. No one was able to really lend freely at that time because it was just such a dark era, right? In '08, '09. I don't think housing prices fully recovered until like 2015, after 2012, right?
Right. Okay. So we spent a lot of time on ADU. We didn't spend so much time on FHA. It kind of went a different direction than I thought it would go. But I'm really glad that you put your perspective onto it because that's very different from what Reventure was talking about. Reventure, his point of view was he wants the government to release this moratorium program so that all the defaults actually happen and we reset the housing market so that people can get into their starter homes for once. Um, but like you said, that would cause a lot of damage to the families that are already in those homes that are in default. So I'm really glad that we went over this and you had a different take.
Yeah.
Yeah, it's definitely a different viewpoint that most people don't talk about. And that's actually a very high level way of thinking in my eyes.
Yeah, because imagine them like if these are concentrated, right? These foreclosures, like Sunbelt, Jason, you said, right? Then who's gonna suffer? Isn't the schools and the surrounding neighborhoods, everyone takes a hit together, right? It's not just the families that default.
It's a major economy shift, right? It's like if those homes fell, prices fell and distress, more and more people, it might set off a chain reaction. And then
Domino effect.
people leave
Hmm.
communities. It could be a mass exodus. Then the commercial side, the business side can get affected. Like you said, important, like school funding would get impacted. And it's like a domino. It could actually be worse than '08 subprime crash because subprime was a small portion of it, but it made that big of an impact. But to have FHA loans, like a million of them come out,
Mm.
and if they're heavily concentrated, like reventure data shows, it's really scary, actually.
Imagine like a neighborhood, there's like 30 houses and 10 of those are FHA and they all
Yeah.
default. And let's say another 10 out of the 30 had HELOCs on them at 7%. Now they're underwater because all the comps are down.
And that's not to say that, Fannie, Freddie loans, people that are in Fannie and Freddie, they see that, oh, my house is like not worth as much anymore, then why should I keep it, right? You see, so because I heard a lot of that when during the 2010s, 2011s, where people would say, why should I keep my house? I mean, I'm upside down on it. And basically like it might bring other foreclosures as well. So then again, it's like the 2008s all over again. But I feel that it's kind of to the wrong sector where we created that program for a reason to get people into the house, and then COVID happens, or something that is out of the control, and for us to not give them more time. And really, I look at it as like those people just can't really get cash out. I see a lot of the ones with the HUD seconds that comes about, they can't get the cash outs, but at least they can stay in their home and not have to come out and be without a home. I guess that's kind of like one of um their sufferings, right? That they're not able to take cash out
Hmm.
because they have that second mortgage. But some people actually choose to pay that off into the first because values has gone up. So a lot of them are not upside down. A lot of them are not upside down at all, because values has gone up quite a bit due to COVID.
That makes perfect sense, especially seeing that. And then if the home prices continue to stay where they are, stabilizes the market long term, then those people will eventually build up equity because market cycles shift. And you go back to the whole thing where you were talking about last week, buy your house now because you lock in your purchase price. And then when the opportunity comes, 2, 3, 4 years down the road, you're going to be able to refinance that down to 5 or 3%, right? Once the market allows.
So, I mean, you don't see the danger in allowing a million homes that are technically in default but not, and they're just the balloon at the end of the mortgage is just growing and growing. So if they do have to sell the house, eventually they're underwater.
I don't think they're underwater though. I think like a lot of them, they still have like equity left. So it's keeping them in the house. It's kind of like during a time when the economy was bad, they're not able to make that payment. They just kind of like the same piece of the pie. They just cut out a portion of it for them to not be paying at that time and basically be able to stay in their house. So I see that they still have some equity. A lot of people are not upside down, like what because if they got their FHA loan in 2019, and even though they went through default and then default again, a lot of them have equity. I don't see that they don't have
Mm.
equity. No, I see that they just can't take cash out because they're over the limit. Once that silent second comes along, then we all stop there. We're like, oh no, you have a second mortgage already. And a lot of them, some of them, they don't know that they have a second mortgage. So
Oh.
they just can't refinance cash out. So because they're gonna then start paying interest on that money that it's shouldn't be. That doesn't carry interest right now.
And you're a big proponent of the FHA program.
Is a great program, it checks out the income. So it's not like a subprime loan that didn't check out income, and that states a
Hmm.
office manager making 20,000. It's not that type of loan. It's a full documentation loan, so they still have to check their
Hmm.
income in order for them to qualify. And actually, they check out the condition of the property a lot harsher than a Fannie or Freddie loan. So the people that get into those homes actually have better condition properties, some of them, than the Fannie and Freddie homes.
Hmm.
So I believe in the program.
Talking about that, like FHA, VA loan, government sponsored loans, they are very picky about condition of the property. Like you can't have any peeling paint, like cosmetically, like no wood damage visible, like even something that's not part of the house, but like a patio, right? Like a porch. Like if there's a single piece of dry or like rotted wood, you have to get that replaced. You have things like mandatory or required handrails, right, on certain types of stairs or walkways.
Yeah.
So it's a very detailed loan where they want to make sure the consumer that's getting that house or buying that house with that loan program, they're going to be in a good place financially, not just income wise, but home condition and maintenance wise. So I think Nikki's right on that part. As far as long term, I don't know how much longer the government has to allow um, protecting people because there's gonna be a fine line. I don't know if it's gonna be another month or maybe another couple of years, but I can see where Nikki's coming from on that regard too, because if you're looking at homes purchased from 2019, 2020, 20, up to 2022, there was I think 40 or 60% increase, right, in home value. So even if it pulled back 20, 30% today, those people still have equity. It's the people that maybe have
Mhm.
purchased in the last couple of years that don't have that equity right now, but it's going to put them in a situation where they can defer it. So is it so bad? Like if they keep allowing this moratorium to go, maybe they'll allow it to have 2 million people to be in moratorium, and then when the rates come down, they'll refinance it because even though it was tacked on to the end, the other important statistic that a lot of people don't realize is most people refinance their loans every 3 to 7 years. So there's a
Yes.
good chance a lot of these FHA loans won't be with those balloons again in the next couple years. Those are probably going to be all wiped out anyway. It's going to be absorbed into a new first trust deed. So either through a FHA streamline or something else.
Yeah, that's the soft landing that you're talking about. I mean, that they've been talking about.
If they can execute on a soft landing, that'd be amazing.
Well, the scenario that you painted sounds like a pretty good soft landing scenario. If we pull the plug on this moratorium, it's going to be a very hard landing.
Yes.
I don't think it's off the table. It could, if they, because everything, all these executive orders are like shock and awe, right? So it literally, like,
Hmm.
he could probably, if they really wanted to, they could probably eliminate the moratorium, and then they start doing the math and they like realize, holy crap, this is not right, and we need to put it back.
Or calling back to what we were talking about earlier, if Trump wants to trigger a recession, pull the plug on this program and there you go, you got your recession.
I don't know if that's a recession. That's an economic collapse. Because like think about it, 1 million homes in foreclosures and average home prices are $200,000. What is that? Is that the national debt right there?
All right, that's it for the show today. Remember what Warren Buffett says, if you don't find a way to make money while you sleep, you're going to work until you die. Let us know how you're preparing for a potential recession. And if you want to take advantage of our 5-day HELOC program, no appraisals needed, then click the link in the description. And we'll see you on the next one. Bye.